and then there's been some stocks come out and get hammered, like Flight Centre and some of the travel stuff related. So
it's starting to step up. All that is saying is the buying pressure is there, and it's starting to create the beginning of an uptrend. So the market may even be up on the day, and then the last half an hour, it'll get absolutely hammered.
Hello and welcome to the Closing Bell this week. I'm Callum Newman. I'm one of the editors here at Fat Tail Investment Research, and I'm joined by the Sultan of Swing himself, Murray Dawes, who's going to be walking us through the Sultan of Swing.
Fair enough.
You like that, don't you? Going to be walking us through a couple of key charts. So we've had a very big week in the market this week, and it's mostly to do with the selling side of things. A lot of stocks have come under pressure, so we'll talk a little bit about that. Murray's going to show us the Nasdaq and how that's looking, and he's been talking a little bit about what's been going on in the US bond market, which is important for world markets all around the world. And then we'll finish with a look at copper and what's going on there. And if you tuned into the show last week, you'll be pleased to know that Murray's mother is safely ensconced in New South Wales and won't be wandering around in the background.
Although my dad did crack his ribs falling in the bathroom, but he's all right now. Oh, did he? He's all right now.
That's no good.
No, it's not.
Oh, sorry, I shouldn't have said anything about Murray's mum. Yeah. All right, so let's bring up the Nasdaq, because you were telling me just before we started that it's looking vulnerable. We saw it fall 3% last week. Nvidia's earnings came out. They were very, very good, but just wasn't enough to support the stock. Tesla down as well. What's going on as far as you can tell?
Yeah, well, I think Trump coming out and saying just on, Thursday night, that he is going ahead with another 10% tariff on China. And he is going ahead with the Canada and Mexico tariffs on March 4. So I think the market is waking up to the fact that he's pretty serious about moving forward with all of this. And I think there's been a sense that, I think he's using this as a deal-making tool, and he's just deals will be made and everything will be fine. But I think he is going to move forward with it. So I think there's a bit of a risk-off happening. We're seeing with the bonds, I've been saying, US bonds look like a buy. We'll probably get a pretty strong monthly buy signal now. I think people are front running the end of the month, quite frankly, that we're going to get this signal. So I think that we're possibly getting a bit of a switching out of stocks into bonds, because you've got the US 10 years up at 4.5%, and maybe people are saying, right, well, I'll just reallocate a bit of funds. We've had the stock market absolutely flying, Nasdaq. Let's reallocate a bit of money out of our stocks, which have been killing it, to maybe even just to balance up the portfolio. You can have things like that happen. So I think the Nasdaq is actually going to get a bit more hammered. It is looking a little vulnerable at the moment. So
are you going to show us on the chart?
Yeah, I'll just jump to the chart and just very quickly show you the setup now, because I think it is quite interesting.
Well, I know Greg was talking about this, that the Mag 7 is the trade, right, of the last couple of years, and it's all about the Nasdaq. So it's the leading market in the world. So if it's going down, it's sort of a bearish signal for everybody. Yeah,
well, I think it can, because it's been going so hard, I think a bit of an unwinding of or profit taking or what have you. If that momentum changes, it can really come off quite rapidly when everyone tries to get out the door at the same time. Doesn't mean it's not ultimately going higher. It's just we've had a really long, strong run at the moment. So I just think it's possibly time for a bit of a pullback. So let's just jump to the chart, and I shall show you what's set up now. So this is the Nasdaq, and I'm looking at a weekly chart to give you a bit more of a short-term view of it. So we've had a amazing strong run, and I just want you to note that fall that we had in August last year. Now this fall here is actually that fall on the Japanese carry trade unwinds.
Yep.
So that's when the Nasdaq got absolutely blasted. So what you want to note is how I look at things, of course, is looking at these false breaks, so these big pullbacks in the market. So what I'm seeing here is that we've had a rally which has gone above that previous all-time high. We have lots of work done for the last few months where it hasn't been able to rally. And now last week or this week, we've seen basically a confirmation of a weekly sell pivot, a really big down bar, so the selling pressure is really there. So that to me is looking like a false break of that high from last August. So if I'm looking at that range, so this correction that we've seen, I'm looking at the midpoint of that range as the thing that I'm sort of interested in, I guess. So I'm really looking at that midpoint of the Nasdaq on that range is around 19,000, and currently the Nasdaq up at 20,500. So there's 1,500 points of a fall. That's a fairly sizable fall, and that could actually happen fairly quickly. Prices going back under the 20-week moving average. It's a false break of the high. So really, I could see it really turning down. The weekly trend's about to turn down. We'd see that with the bonds, there's a lot of buying pressure in those bonds, so that could have been a precursor or a bit of flight to safety. But we're just seeing a few moves in the markets. There's big money, and I've actually noticed, and I often notice this at big turning points, you'll see for a week, a few days, you'll see big selling pressure right at the close of the day, and then in the overnight market, it'll miraculously rally really sharply. So what my theory on that is when there's really big players who have a lot of stock to get rid of over multiple days or weeks, in the overnight markets, it's really illiquid. So it's pretty easy to ramp. So if you know you've got more selling to do, what better way? And they usually, the big guys, they'll sell right on the death. So the market may even be up on the day, and then the last half an hour, it'll get absolutely hammered.
Okay.
And that's when you know you've got some big players about, because they usually sell on the close. And then when the overnight market, when you see the market all of a sudden miraculously rally much more than you'd think it would, I think they actually buy it up when there's no liquidity. So then the next day, the market's opening up nice and high when the volume's there, and then again the selling comes. So I've just noticed that in the last few weeks, there's been that characteristic going on in the market. So that's where I've been going, this is starting to look like this correction is going to be a bit more than just a week of selling.
My old mate, Gary Norton, used to say, when you get a particular signal or like that, you want to see if it's playing out in other markets. And it just occurs to me that we've seen selling pretty extensive in the ASX this week, and also Bitcoin coming down.
Yeah.
So they're all kind of signaling the same thing, right? That we're going into a risk-off period.
Yeah, that's what I think it looks like. And how far it goes, who knows? But we've had a hell of a run, and Trump is just about to throw a couple of little bombs out there. And I've been saying the US dollar is looking like it wants to fall, and this was 3-4 weeks ago on a closing bell. I said, look, the US dollar is looking ripe to get hammered here, and it did get hammered. So it went from like 108 down to 105 and a half or 106 or something. So two big figures in a few weeks. So it was a lot of selling pressure. But then Trump came out and said, I am actually going ahead with the tariffs, and the US dollar ramped, because this is what everyone expects, is that the tariffs come on, US dollar up, the currency that they're putting tariffs on, that currency goes down. So if that is going to be the case, maybe we're nearing the short-term end of the selling pressure on the US dollar. That's something where Trump is going to throw in. The news of that is something to consider. Like, is that going to actually change what the US dollar was naturally wanting to do, which was sort of sell off? But the bonds are certainly seeing buying pressure.
Did you want to bring up the bonds chart?
Yeah. Let's have a quick look at the 10 years.
So I remember, as we were just chatting about this, it was, I can't remember exactly when it was, maybe a year ago, when bonds were threatening to go to 5%, and that was, everyone was getting worried. But now they're moving the other way, right? The yields? Yep,
that's it. And this is where I've been, quite vocal recently, saying I thought the US 10-year bond yield was going to drop. And this is where, we know that there's been this massive uptrend in yields. So this is the most recent up wave in yields to that 5% high in those US 10-year bonds. And again, I'm looking at that wave.
That was a huge move in hindsight, now that I'm looking at the thing.
Yeah. And so there's the midpoint of that whole range, which is around sort of 4.1% or something. So, pretty clearly, there's my buy and sell zones, is those areas within the range. And you can see over time how often the yields have been bouncing around between that. So it's just really been going from that buy zone back to the midpoint, sell zone, midpoint, buy zone, midpoint. And this is the most recent one, which really has been a weird move, because they lowered rates and then 10-year bonds went up.
Yeah.
So they're at 3.5%. I thought, I'm going to miss this. The yields are going to really drop. And all of a sudden they went bang. And because the inflation was still a bit of a problem, and Trump's policies were like, what's going to happen? Is he going to issue heaps and heaps of debt? And all of that seems to be a bit overblown. So this is sort of like a second bite of the cherry at high yields. So this is why I've said just recently, and now at the end of February, it's going to be this monthly buy signal in these bonds. And the main reason I'm excited is because, there's really the high in yields, which was quite a while ago. That was mid 2024.
Yeah.
And so then we've seen lots of work, and from this sell zone, it's like, well, this is actually where quite a large move could happen. So we could actually see a large rotation in those 10-year bonds right down to test the bottom of the range and maybe further. Maybe this is the beginning of a real drop in yields. So I think it's quite a big opportunity.
It just occurs to me in your chart of the day, which you do for Fat Tail Daily, which is the email we send out, you talked about oil. Yeah. And oil looks vulnerable, right, to going down. So it could be part of this.
Yeah, maybe a slowing
right?
down, or it's usually a bit of a hint of economic slowdown can be seen in oil. But maybe that deals with Russia coming back on, online. We're seeing uranium getting hammered.
But it takes the inflation pressure off too.
Exactly.
Which would help the yields.
Yes, exactly. Yeah. So we're sort of seeing maybe this deals with Russia is heading the energy markets, and maybe Russia's going to be back in the fold and selling their oil in the West again, so supply is going to ramp up, and maybe we're having economic slowdown as well. So oil really does look vulnerable under 69. I think it could get absolutely smashed.
And I just saw a guy say too that the idea of peace in Ukraine sort of maybe taking the wind out of gold a little bit too, because you mentioned it sold off last night too.
Yeah, it's been hammered from the highs. We took a bit of profits at the end of last year. It's been a massive run, and monthly all still looks amazing. The trend, it could fall heaps and still look really good. This just could be a healthy correction along the way.
But we have to get one at some point with gold.
Yeah, exactly. And we're just seeing maybe a bit of a raising of cash levels. The big guys know that they're going to be selling out of Nasdaq, and there's going to be stuff coming, so they're selling a bit of gold, they're buying bonds. So everything is sort of looking at like markets are a little bit vulnerable, and people are raising cash levels a bit. Looking at that sort of thing and going, right, well, how is this going to play out? And that's where we're looking at copper.
Well, we're touching on, I just make the point that, this is sort of the macro landscape, but stocks will swing and move on their individual results too. So we had some positive results. It's not all bad out there. Like Qantas, for one, came out with a great update and went up, and PointsBet got a takeover offer and shot up, and then there's been some stocks come out and get hammered, like Flight Centre and some of the travel stuff related. So that's all in the mix as well. But unlike oil and some of the other commodities, we noticed that copper is sort of moving up this year. So bring up the copper chart.
Yeah, let's have a look.
It seems, I forget what the right word, incongruous, I think it is, where China is perceived to be a little bit weak, tariffs are deflationary or what have you, or crimp economic growth, and yet Dr. Copper seems to have got a bit of perk about him. And this is, if you're watching this, for the last couple of years, every year you get this, there's going to be a big copper squeeze because there's too much demand and not enough supply and all this type of thing. It hasn't happened, and the copper stocks have sort of, or what few that there is, have sort of done very little. But how's the chart looking?
But still, and I've been saying this all along, copper's one of the strongest looking charts. You see other commodities have been absolutely hammered. And so that can be a great relative way of looking at things over a long period of time, saying, well, we've got nickel, lead, everything all smashed and multi-year lows, and we have copper sort of holding near the high. So it's like, well, if we do get a recovery, which one's going to be the strongest? It'll be copper. You want to be buying the one that's strongest when things are weak, because that one's the one that's going to probably take off. So
since 2025, we're up about 15%, right?
Yeah, and look, this is a really long-term chart for copper. So around this $5 region, right? So this is going back to 2007. This is all going back to 1999 actually, but you can see this whole area around $5 has been massive resistance for years, and this is like an all-time high. So what you're seeing is this sort of building up pressure towards a final breakout, in my view. So I'll make this nice and easy to see.
It'll be a big break. That's 20 years.
Well, exactly. So we're seeing, from the lows in 2015, what have we got going on? Right. What's this look like? That's an uptrend, right? High highs, high lows. It can be tricky to see when you're looking at a market. So you really, to really make it simple, It's like, well, it has actually been trending up nicely. It hasn't gone and broken below that previous wave trend. It actually created a new high recently in the move. It's had a pullback, which is a healthy pullback, while all the other commodities are getting absolutely smoked. And here it is, close to that $5 level. So this sort of $5 to $5.50 level, there's going to be a time when it's actually going to just take off and do this and rally for a couple of years and be up at 7, 8, because this is where it's like that Coke bottle getting shaken up. It's just sitting there. It's not going yet.
It's a market that's like well watched. We're hardly the only people to be watching copper. Like a lot of people are. It's kind of
we knew
positioning for this.
The future-facing metal. It's sort of the key protagonist in that. Everyone knows, and it is behaving in a way that it wants to go higher.
And as I understand it, the fundamentals are true. Like the grades are getting lower. They've got to go deeper. There's not been a new mine for ages. They're running down the reserves. So it's all part of this dynamic that it is set to be explosive.
Yeah, I think, and I've been preparing, I've been saying in closing bell, letting people know that it's actually looking pretty good. It's been treading water, and of course it feels boring, but when you look at it really big picture, you're like, this is looking strong. It's the long-term trend is up, had a monthly buy pivot recently, it's just done a bit of work around that, but it's all, to me, looking like a really nice chart, and surprising that it's so strong just now, even though the tariffs are coming, that tariff announcement from Trumpy and China. Property still on its ass and probably has a few years left to run out, I think, in Chinese property. So even with all of that around and stock markets getting nervous and selling off, and copper still goes up 3-4%. So that's definitely one to watch.
Well, if you're watching this, an idea to follow for mine is Develop Global, which is one of the recommendations I made in my Service Australian Small Cap Investigator. So it is a prospective copper miner. It's got a mine in New South Wales, copper zinc deposit. That's looking fairly strong.
The guy that runs that's a very well-respected dude, isn't he?
Absolutely. I was saying to one of the guys in the office the other day, it ticks a lot of boxes. It's got Bill Beaumont, which he's a fantastic entrepreneur, mining entrepreneur, made a lot of money in gold, and now he's taking on this particular deposit. Copper is moving the way you want it to when you're going in, and it's about 6 months away from...
And it does mining services as well, doesn't it?
It does. That's another little division that he put in place, but the big money is going to come if copper flies and they can get into production. So it's not in production yet, but there's a known sort of sweet spot for a stock that the market will bid it up as it gets closer and closer to its first production and first cash flows. So if copper keeps going, DVP is looking strong. And just for interest, with the heavy selling that we've seen, it's actually managed to hold up fairly well, which a lot of stocks haven't done in the last week or two. So I'd suggest that some of the fund managers are watching that one very closely because
let's have a little look, huh?
It's looking very interesting indeed. So just bring it up. DVP, it's a Develop Global. Now, of course, the flip side of this situation, of course, if copper tanks, it's going to tank as well because he's not in production and it's all riding on what copper and zinc do because that's what the cash flow is coming from. But you can see that big spike there in the chart. That's when Bill Beaumont announced his involvement with the company. That's how
big he
people
is.
Excited were when he
But he got a big share of it. I was looking at his
he bought
deals
a huge stake
and he got given a pretty big stake and I know. And I was following it, but then it's been a few years of treading water and I've left it alone. But, it is starting to look interesting again.
When you say treading water, that's a common thing where you get this type of stock, a developer, where they're doing the kind of boring stuff like getting the approvals, environmental, getting the staff in place, and there's no money coming in, so the market's not going to chase it at that point. But now we're getting into where the rubber hits the road a little bit.
Yeah, well, let's have a look at the chart. We've got this rally. From as you said, him coming on into 2022, and the fact that it hasn't completely collapsed like all the other resource stocks is one really big plus. But then here's your initial reaction. So there's your major wave as a reaction, and then let's have a look at the buy and sell zones of that. So there's your sell zone within that wave. There's your buy zone within that wave. And what has the stock done since? It rallied up to where? Sell zone, exactly. Back to the point of control, then it's at a rotation all the way down into this buy zone area, and it's done a lot of work. It's certainly shaken out a lot of people, but look at where all the buying pressure has come in. has been around this buy zone and it hasn't broken back below the low of that wave. So that means it's accumulating. So this is accumulating off all the people who bought too high, keep it low. They'll make them all nervous, make them sell out. So I reckon there's a lot of accumulation going on. And actually, we've got, if I'm looking, it's pretty tricky, but there's your first monthly buy pivot there. Bit of work done. Again, shaking everyone out. But this month is sort of going to be that first key bar, I call it, when you get a monthly close above the high of the monthly buy pivot. Anyway, that's just saying you're starting to step up. All that is saying is the buying pressure is there, and it's starting to create the beginning of an uptrend. So looking at the trends as well on the monthly, look at that. We're getting very close to that 10-month exponential crossing the 20-month simple. So there's a long-term trend shift underway. So that's all looking pretty interesting.
It's one of the more exciting ideas I've got at the moment. And of course, like if copper does go up, the net present value of that mining operation goes up with it. So the market will price that in by pushing the stock up. So that's why we're watching copper so closely, because the Aussie dollar, of course, because those two things are very important for that type of stock. So absolutely a very exciting stock there with Developed Global. All right, so we've covered off. So macro risk is kind of higher.
Another 5%, 1,500 points, 7% downside in the Nasdaq, which could be pretty quick.
So we could be looking at a continued selling pressure on the general market, but as always, there's individual stock stories marching to their own drum. And we talked about Nanosonics last week, which has burst out of the blocks, and then we've seen PointsBet, and there's been a few other ones.
Even Testra's looking good, actually.
Yeah, well, we might talk about that next week. So speaking of which, if you want us to look, or you want Murray to chart a particular stock, drop it in the comments, and we can tee it up, and we'll leave it there for today. Thank you for joining me.
All right, nice one.
But if you want to hear from the Salt and the Swing, leave us a comment, give us a thumbs up, and don't forget to read Fat Tail Daily, and we'll see you next week.
All right, cheers.